Stock split. A corporation may split its stock by increasing the number of outstanding shares of common stock and reducing the par value per share in proportion, so that total owner's equity is not changed. The stock split means the corporation will be dividing the share. يعني هتقسم السهم، تقسمه 2 3 4، فبتزود عدد الأسهم، بدل ما يبقى سهم واحد يبقى 2 أو يبقى 3 أو يبقى 4 ببروبورشن معينة بتقلل البار فاليو بتاعة السهم. يعني بتزود عدد الأسهم وفي نفس الوقت بتقلل البار فاليو بتاعة السهم بنفس البروبورشن، بحيث ان التوتال اونرز equity at the end is not changed. يعني ما بتزودش في رأس مال الشركة، هي بس بتزود في عدد الأسهم الاوتستاندينج، وفي نفس الوقت بتقلل البار فاليو بحيث ان هي ما بتغيرش من الاونرز equity. To illustrate, assume a corporation has outstanding 1 million shares. يعني عندها 1 million shares, 10 LE par value, market price per share is 90 LE. Say a corporation decides a 2-for-1 stock split. Here the ratio, the proportion is 2-for-1 stock split. What we do is, the number of shares outstanding, 1 million shares, this 1 million shares will be multiplied by 2/1. Because the stock split says it's 2-for-1. I multiply the number of shares by 2/1. I get 2 million number of shares were doubled. At the same time, the par value, which was 10 LE, will be multiplied by the reciprocal of the ratio. Instead of 2/1, it will be multiplied by 1/2. The same ratio, but the reciprocal. Reciprocal means the opposite. The denominator comes numerator and the numerator becomes a denominator. And here the par value is 5 LE. So the par value is reduced to the half. At the same time, when the number of shares was doubled, the par value was reduced to the half. If you calculate the capital, in both cases, before the stock split and after the stock split, you'll find before the stock split, it's 1 million times 10. So it's 10 million. After the stock split, it's 2 million times 5. So it's the same 10 million. So owner's equity as a total is not changed. So the corporation now reduces the par value from 10 to 5 per share and increases the number of shares from 1 million to 2 million. This action would be called a 2-for-1 stock split. 2-for-1, doubling and half. A stockholder who owned 100 shares of the stocks before the split would own 200 shares after the split. So what is the aim of the stock split? It's usually a question in the exam, asking why a corporation might have a stock split. Since the number of outstanding shares has been doubled without any change in the total assets and total stockholders' equity, the market price of the stock should drop from 90 to approximately 45, the half. Why do we expect that the market price would be reduced to the half? Because the supply of shares was doubled. And you know from economics that increasing the supply leads to decreasing the price. When the supply of any product, of any good, when the supply of the good is increased, the price of the good goes down. يعني العلاقة ما بين العرض والطلب والسعر. لما العرض بتاع أي product بيزيد السعر بيقل. فهنا الكوربريشن زودت عدد الأسهم المتاحة، فزودت السبلاي، زودت العرض، يبقى السعر هيحصل له إيه؟ هيقل. إيه البيربز بقى؟ ده مهم أوي. The purpose of stock split. The purpose of stock split is to reduce the market price of the common stock with the intent of making the stock more attractive to investors. so that investors and small investors would go buy the shares, which would lead to increasing the market price afterwards. When the supply of shares increases, the price is reduced. Economic theory says so the shares will be more attractive to small investors. That's the purpose of a stock split. So what's a stock split and the purpose of stock split may be a theoretical question in your exam. A stock split does not change the balance of any ledger account. يعني it didn't change any about the cash. No cash in, no cash out. No more capital, no less capital. No liability. No assets, no liability, no revenue, no expense. It doesn't have any effect on changing any ledger account. That's why in the journal we do not have a debit or credit for recording a stock split. We just, inside the journal, we prepare a memorandum. It's just like a note, but it's written inside the journal with the date and saying in this memorandum what happened. We say issued additional 1 million shares of common stock in a 2-for-1 stock split, par value reduced from 10 to 5 per share. In this illustration, you can train yourself for an exercise that have everything related to what we studied in accounting for stock corporation. It have everything. It has everything. Okay. You are given example the same as the one we solved before, but it has more extra items. For example, it has stock split, and also it has dividends, cash dividends and stock dividends, and you should study the part of stock split and the part of difference between cash dividends and stock dividends before starting to study this illustration. You are given owner's equity at the end of year 2018 and transactions affecting owner's equity during 2019, and you are required to journalize these transactions during the year, and at the end you prepare the owner's equity at the end of 2019, showing the effect of these transactions on the owner's equity. In the illustration, you'll find the first date. He says that the corporation had a 5-4-4 stock split. 5-4-4 stock split. In the explanation of stock split, if you remember, the ratio was 2-for-1. Here it's 5-4-4. Any ratio. I just multiply the number of shares issued from the given owner's equity, 40,000, multiplied by 5/4. I get 50,000 shares issued after the stock split. Then by the stock split, the number of issued shares changed from 40,000 to 50,000. The par value was 10 from the given owner's equity, and we multiply the par value by 4/5. As I said, the reciprocal of the stock split. The stock split says 5/4. You multiply the number of issued shares by 5/4, while you multiply the par value by 4/5. So the par value is 8. So 8 LE is the new par value after the stock split. Inside the journal, the solution starts by the journal, and the stock split inside the journal is recorded in a memorandum. It's not a debit and credit journal entry. It's a memorandum saying that stockholders approved, because stock split requires stockholders approval. So he says stockholders approved a 5/4 stock split. This action increased the number of shares of common stocks outstanding from 40,000 to 50,000. That's what happened. When we multiplied the issued shares 40,000 by 5 over 4, we got 50,000. So we say that the number of issued shares outstanding increased from 40,000 to 50,000 and reduced the par value from 10 to 8. And that's what happened when we multiplied the 10 par value by 4 over 5. And then on April 1, he says that the corporation purchased its own stocks at a price of 37 LE per share, purchased 2,000 shares of treasury stocks. And the journal entry for the purchase of treasury stocks, you already know it as debit treasury stocks, credit cash. We multiply the number of shares by the price of purchasing the shares, and it's not related to the par value. Then on July 1, he says that the corporation reissued 1,200 shares from the 2,000 that were purchased as treasury stocks. So it's reissuance of treasury stocks, and they were reissued at a price of 45 LE per share. So you multiply the 1,200 by 45 to calculate the cash collected from selling the treasury stocks. And then treasury stocks credit by the original value of purchasing these stocks. So you multiply 1,200 by 37 to get the 44,400. The difference between 54,000 and 44,400 is 9,600 additional paid in capital treasury stocks. Then he says that the corporation issues 20,000 shares for cash. These 20,000 shares were issued at a price of 45 LE per share. That's the market price on that date. But you remember that the par value now is changed. It's not 10, it's now 8 par value. So cash will be calculated according to the price. 2,000 times 45, you get 900,000. Credit common stock capital, issuance of shares, the same as our first illustration, just revision. So common stock capital credit by multiplying the number of shares by the par value. Usually we said that the capital calculated using the par value, not the market price. So common stock capital credit by 160,000, which is 20,000 times 8. The difference between the cash collected according to the market price, 900,000, and the capital recorded according to the par value, 160,000. The difference, subtraction, we get 740,000, which is additional paid in capital common stock. On November 1, he says that we had a declaration of cash dividends, 2 LE per share. How many? The board of directors declared a cash dividends of 2 LE per share. The problem here is how to calculate the number of shares outstanding, because the number of shares outstanding will be the number of shares getting the dividends. On declaration of cash dividends, retained earnings is debited. Why retained earnings is debited? Because it is reduced. Retained earnings account is credited when we put profits, when we have more profits in it. When we get out from it, when we use from it, it's debited. So when dividends are distributed to shareholders, always the retained earnings account is debited. Opposite to the fact that the retained earnings account will be credit whenever we are having profits in the corporation. So putting more profits in the retained earnings makes the retained earnings credit. Using from the profits to distribute to shareholders or any losses for the corporation would cause the retained earnings to be debit. So retained earnings is debit, and dividends payable, it's a liability. Dividends payable is a liability. As soon as the board of directors declares distribution of dividends, the value of the dividends to be distributed is considered a liability, the same as accounts payable. It's called dividends payable. How to calculate the value? We need first to know the number of shares that will be getting dividends. How to calculate the number of shares? 50,000 shares after the stock split were issued. So the issued shares used to be 40,000 if you remember. And then after the stock split, when we multiplied by 5/4, we said that the issued shares changed from 40 to 50,000. And there was issuance of more 20,000 shares. If you go back and revise the transactions in the journal, you'll find that 20,000 shares more were issued. So 50,000 plus 20,000 minus 800. What is this 800? The treasury stocks. Somebody would say the treasury stocks is 2,000. Yes, the treasury stocks used to be 2,000, but we reissued 1,200. So what's remaining from the treasury is 800. That's the amount that's subtracted in the owner's equity. At the end of the owner's equity, we subtract the amount of treasury stocks remaining in treasury. So the number of shares outstanding, 69,200. The 800 shares of treasury is not considered outstanding. They are not in the market. They are kept with the corporation as treasury stocks. They are not receiving dividends. So when I say the number of shares that will be receiving the dividends, which is 2 LE per share, you say it's 69,200 shares. You multiply 69,200 shares by 2 LE per share, you get the 138,400. Just debit retained earnings, credit dividends payable by this amount. Then he says on November 22, the board of directors declared another dividend, but this time it's stock dividends. And he says it's 10%. 10% means 10 over 100. You multiply the 10 over 100 by the same number of shares that we just calculated, 69,200 who deserve to get the dividends. Who deserve to get the cash dividends? The same number will deserve to get the stock dividends. So the extra shares that will be given to shareholders in the form of stock dividends to be distributed, the number of shares is 6,920 shares. You multiply this 6,920 by the market price per share given, which is 48. You get the amount to be deducted from the retained earnings, 332,160. Then the capital, we cannot say it's capital yet because these shares are not yet distributed. So it's a liability, the same as what happened with the cash dividends. This liability is stock dividends distributable, like accounts payable, or we can say to be distributed later on. So it's liability. And this stock dividends to be distributed is calculated by the par value of the share. So the number of shares here, the same 6,920 extra shares, will be multiplied by 8, which is the par value of the share. The difference between the retained earnings in the debit, the stock dividends to be distributed in the credit, is additional paid in capital stock dividends. That's on date of declaration. Then he says that the date of payment for the cash dividends is December 20. On date of payment, we just close the liability, which was dividends payable by the same value that was in the dividends payable. Go back to the previous slide. You'll see that the dividends payable was 138,400. It was in the credit side as a liability. Now we are closing the liability, so it goes to the debit side and credit cash. So it's payment of cash dividends. And on December 20, the same date, the board of directors decided to pay for the cash dividends and also to distribute the common stock as stock dividends. So the to be distributed will be debited to close the liability. We said that stock dividends to be distributed is a liability. To close the liability, you make it debit, and now it's capital. It's not to be distributed. It's already distributed. So it's common stock capital. And that journal entry, you write between brackets that it's distribution of stock dividends. And the last journal entry, usually on December 31, to close the net income of the year in the retained earnings. See the difference between retained earnings in the credit and retained earnings that used to be in the debit. Retained earnings in the debit is retained earnings out. Retained earnings is in the credit is retained earnings coming in. So the net income at the end of the year goes inside the retained earnings. Increase our retained earnings. Fill our retained earnings with the money. While distribution of dividends would get money out of the retained earnings. That's why here it's debit, while in this one it's credit. And of course, retained earnings credit is a plus to the retained earnings, while retained earnings debit is a minus to the retained earnings. The last step is to show the owner's equity at the end of year 2019. You just copy the given owner's equity, but with changes. You see the par value is written here as 8. It used to be written as 10. You know why? Because of the stock split changed the par value from 10 to 8. The authorized shares is not changed. For the issued shares, the number of issued shares used to be issued shares used to be before the distribution of extra shares, and then we add to it the amount of extra shares distributed. It used to be 70,000, including the 800 shares of treasury stocks. We do not subtract the treasury stocks from the issued shares. So I'm not going to say it's 69,200. No, it's not 69,200. It's 70,000, including the 800 shares of treasury stocks, because the 800 shares of treasury stocks are included in the issued shares. They are subtracted at the end of the owner's equity, but not subtracted from the issued shares. So when you tell me the issued shares, you do not say it's 69,200. No, it's not 69,200. It's 70,000. 70,000 plus the extra shares that were distributed to shareholders because of the stock split. Because of the stock dividends. The extra shares were 6,920. So it's 70,000 plus 6,920. We get the issued shares to be 76,920. 76,920 multiplied by 8, you get the value 615,360. Then we go to the part of additional paid in capital. You just add the given additional paid in capital common stock to any other additional paid in capital in the journal. And we have the additional paid in capital treasury stocks, that amount that happened as profit by reissuance of treasury stocks. For the retained earnings in the given owner's equity, you subtract from it the retained earnings that was debited for the cash dividends and the retained earnings that was debited for the stock dividends, and you add to it the retained earnings credit, which was on December 31 to close the net income of the year. The last step in the owner's equity is you subtract the treasury stocks. We didn't subtract the treasury stocks from the issued shares, but we subtract them at the end of the owner's equity. Treasury stocks was 800 shares. You multiply the 800 by 37. What's the 37? The original price at which you purchased these shares on date of purchasing the treasury stocks. This is the only value that is subtracted from the owner's equity. So you add all the values, you just subtract the value of treasury stocks, you get the total stockholders' equity.